All right, so let's jump into things. Where we at? 10 past 11 on 29th of January. So only a couple of days of the trading month left here now. So alarm's going off. Look, I'll start off with Aussie because we've got CPI coming out in a few minutes, and it's a bit of a mixed bag. But I think from the talking heads, and that seems to be general consensus of a cooling. But in saying that, let's flip across to the news real quickly because the what we're looking at here is a slight tick up in the year on year and the quarter on quarter, but the trimmed quarter on quarter is supposedly coming down. And I think this is probably the one that they're going to sort of look a little bit more towards. Just based on the fact that sort of like, trimmed sort of takes out your sort of like your more sort of volatile sort of bits and pieces and that can sort of play with the sort of headline numbers a little bit. But it is a little bit of a mixed bag. We are looking for a bit of a tick up here, but I think this is the one that'll probably move the market a little bit more, the trimmed CPI here. So if we see this as a tick down, it obviously sort of puts it in the camp and puts a little mark on the sort of idea more of a sort of bit of a rate cut. So obviously that in turn weak for Aussie. And we can see this a little bit sort of through what we've seen the last couple of days. Obviously, look, there's so many factors. It's not just to sort of say that, hey, look, it's they're pricing this in. There's also, as I said, mainly the tail end of sort of what happens with the US, what's happening with Trump, what's happening with tariffs, what's happening with China. Like, there's so many factors in that are really moving it. So obviously, sort of the rate cuts are like pretty much kind of like the holy grail of sort of what you're looking for in terms of what they're going to do, obviously with the rates and that, for strength of the currency. But it's not the only factor, of course. But what we have sort of seen, obviously, is a little bit of a sell down here, sort of given sort of, extra sort of tariff talks and Blanchett or whatever his name was. Um, that sort of knocked things down there yesterday. And really, yesterday was just a little bit of a dribble. But you can see that the market's very much respecting this level that we sort of marked out here. It did try to hold it at first, a little bit of a bounce up. Sellers came back in where we already had these things marked out as well, and really just put a bit of a cap on it throughout the session. I thought it might have sort of got down and sort of tipped down into around 30. Well, we got to 37 or so. So yeah, it came down close there. But what it is sort of showing us here at the moment is a very well-defined sort of level where the sellers are trying to hold the price. And look, it's not a big surprise because if you look at DXY and obviously that US dollar sort of strength on a broad sense, that just sort of it popped up yesterday and then it just oscillated around that sort of resistance zone, which I'll get to in a moment. It was a bit of a sort of trumpet top and now it's turning into a bit of a diamond top. So look, US does look like it wants to sort of probably sort of have a little bit of a cool down from this area. It's had multiple attempts sort of coming up at that top end. If we do see that sort of start to sort of sell off, you may see Aussie recover a little bit, even if the CPI does come in a little bit lighter. So a little bit lighter, so softer print. If that sort of trimmed number does come in down, then we've got to see obviously markets start to price in a bit more of the idea of a rate cut coming in February, so in a couple of weeks. And as I said, that's obviously the holy grail of sort of what the market's kind of looking for. Um, within its own sort of currency kind of thing. As I said, Aussie's the tail end of what's happening with the US dollar more so than our sort of homegrown data, but that does obviously weigh into it. So if we've got rate cuts and US dollar selling off, we can still appreciate in price, but at a slower rate. If that makes sense. There's two factors kind of moving that there. Whereas if we get a hot CPI print and you get the US dollar selling off, then the two segments are both pushing up. So really, it's sort of like, you got CPI on a hot print pushing up, US dollar selling off will push Aussie up. Whereas you can also get the sort of the flip of it all. So we could also get the CPI come in light, but then US dollar sell off. So you've got the two segments there. The problem with Aussie, most recently in the last couple of months, is this. people have been talking about sort of, oh, rate cuts are coming, rate cuts are coming. US dollar's been strong. Both segments of that market have been pushing to the downside. And obviously, we know what's happened to Aussie in the last sort of 3 months or so, losing like 10%. Aussie's not alone with it all. I mean, a lot of the market's been smashed, but Aussie has been exceptionally smashed. We went from yearly highs to, you know, 3 to 5 year lows or so within the space of 3 months. So that was an incredible sort of sell-off, which everybody knows. So anyway, look, what we're looking at here, potentially if we see a hotter print, this is the level that we can see that the sellers are back holding this top area here. It's given a very nice little defined area. Don't need to put too many of these things on. We can see that there. Got a little bit of a dip down here, grab some liquidity, bang, and ready to sort of maybe push back up here. So should we get a sort of hot print? Should we get something that sort of supports it and we get the US dollar sell off? Areas that I'm going to be looking for, probably through this area here, so which is that bounce high at 74, but I think sort of 90 is really going to be the one that, makes or breaks the Aussie in terms of, not makes or breaks, but in terms of sort of where if we're actually going to be pushing back up and looking up to our price targets up around 64 cents. Because remember, we got this big breakout. We did all the effort. We got out of the channel. We did the back test. We did the higher highs. We got knocked back from the swing points. It did everything on a technical basis it needed to do. And then it just sort of dropped down in that. And as I said, this is mainly through we had sort of Monday morning, we had the Columbia 5 minute debacle. We had sort of, not, I don't know if it was Trump, it was Bassett or whatever, but it was a bit of a joint thing in that. It was like that Bassett dude or whatever his name is was saying, oh, look, we want sort of we want a global tariffs, and then Trump sort of coming out saying, look, we want even higher than that. I mean, it was 2.5%. So all in all, not super bad if they are going to impose something like this, because, you know, prior to his day one, they were saying, look, as an average, 8% was expected across the board. So 2.5% is actually lower than that. So of a bad situation, it's not too bad. You know what I mean? So yeah, we'll have to see how we go. So top side, they're the two zones I'm looking at, 74, 90. If you get above 90, I think we probably have a little bit of game on. Obviously, sort of the highs over here are going to be the next level that we'll be sort of looking for. So this will be your major breakout. Look, it hit back and sort of rejected from pretty much exactly where we marked it out, a couple of points over the top of that one there. So, it's obviously got what it needs to get up there, as long as the landscape doesn't change. I'm sort of big sort of a fan of this sort of um, analogy with it all. And the idea is that, you can make your levels, make your charts and all these kind of things, and you can see what the price is doing, you can see what the buyers are doing, see what the sellers are doing. But when you get these large bits of data, and particularly sort of CPI, I put as second tier, just after rate decision being the top tier bit of data, these kind of things, they change the landscape of what these larger players are actually pricing these assets at. Given the new information, given the idea that, okay, say in this instance, it's really hot data, well, that means, look, we are looking for a higher level. Not, you can still use these levels, but it means all in all, you've got to change the landscape of where they may actually price it, and then it'll oscillate and sort of drag towards that price, or sell off down towards that price should we get a sort of bit more of a cooler print. So top side, they're the two levels that we're looking for. So whoop, one, two, and then obviously major breakout there. They're the levels we're looking for there. Um, Downside, look, I'd be surprised actually now that I sort of have a look through this whether we actually hold this. I would say you're probably more looking at something down here at best. 62.18. Look, we could come out and drop sort of 50 points here. Aussie, as I've said a number of times, one of the market's favorite pastimes is to sell Aussie. So should we sell that down there, I think we'd probably be looking, as I said, maybe you'd want to kind of hold this level down here around 20s, because you got a little bit of a rising support. You can see buyers moving up, buyers moving up. Should we sort of break this area here? I think we're probably looking, you know, not necessarily in one move. We could definitely drop sort of 30, 40 points in one point in one move. But should we break these levels here, 62.15s and that, there's a bit of chop through this zone. It is a high time frame support area, but I would say, yeah, probably looking, these kind of zones down here. So, probably sub 62, call it that. I wouldn't be surprised if we sort of get down there, if we do get a bit of a cooler sort of thing, and you hear a whole bunch of people talking about, oh, it's going to be a rate cut, it's going to be a rate cut. So we'll have to sort of see how that one plays out. But certainly for the moment, it's just being held in place. All right, flip along quickly. We've got 10 minutes, so we got that data come out, so I'll go through as quickly as I can. We got DXY, as we said, sort of, yes, I expected that little bit of a gap up, jumped right up into that area, popped up, sort of oscillated around this other sort of little zone that we put in here. It did hold it a couple of times, and then as you can see, I was like, oh, look, it's I'm not a big one for these sort of more, they call like diamond tops and trumpets and or something like that, megaphone patterns, that's what they call. But as you can see, market's just really just sideways, more or less sideways with it all. But the idea behind these kind of things would be this, as a diamond like that. I'm not a fan of diamond tops. I don't think they're a reliable. I don't think they're a reliable pattern. A number of times I've been like, I mean, technically on paper they're reversals, and you can see the idea of it. I mean, basically it's a triangle, but the triangle's sort of coming in, so it would actually sort of favor it to go to the top side here. But you can see sort of it's just wiping the book both sides, sitting there, oscillating around. Technically, they're reversals. So you sort of come back down here and look to close yesterday's gap. I'm surprised we didn't actually get a bit more of a sell-off yesterday. It certainly looked like it a couple of times. I wasn't trading the idea of this diamond top, but more the megaphone pattern. The megaphone pattern again, basically, as you can see, it's half of this diamondy kind of pattern, and also their reversals as well. As you can see, it's trying, and then all of a sudden it's not able to get quite as high each time. So I think more, just take the high and the low of that area and call that your breakout box. I think that's a more reliable way to sort of trade this thing. Should you go up to the top side, 108.20 is probably where I'd be looking, probably even maybe a little bit lower, maybe the body fill of this one here, but we're talking 5 points up to the top side here. So should we break out of here, I'd be looking for something to this effect. I do believe they'll sell into it. Oop. What's going on there? Like this. But I do also think that there's a possibility we come down here, close that gap, and then also see a little bit of a push up here. Remember, we've got FOMC tomorrow. I think maybe this morning, is it? Quick look. Yeah, 6 a.m. tomorrow morning. So typically with these things, you can expect market to do this kind of sort of stuff. Got 6 minutes of CPI now. You can expect market to do this kind of stuff coming into these larger bits of data. Well, large bits of data, FOMC, as I said, that's what I've sort of put down as sort of tier one sort of data. So, yeah, like markets basically sort of, they've done the positions, taken the spots, okay, boom, 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 boom. Now it just goes into snooze mode and a little bit sideways. So, look, as I said, if it pops up here, I expect to be sold down. If it does come out the bottom here, you could also find some support, obviously, sort of around this 107.70 area where it sort of bounced back off yesterday. But I would look to maybe close that gap. I don't imagine anything major, but they're the two sort of ways that I'd be looking to sort of trade this. But I think realistically, if you get up here, the chance that you just sort of end up, this turns into a sideways box and just a little bit of stuffing around with it all. Gold flipped across. It came back beautifully. I caught this bounce yesterday. Of course, a typical status in that I didn't ride it all the way. I did actually. I got the last ones out in about 60. So this is what we were saying the other day as well. I'll just put this on because this is very similar, as you can see, to what we were seeing with Aussie a moment ago, in the sense of sort of very well defined sellers, 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 sellers. Once it went, boom, and it's up. So now this is the interesting sort of thing with gold. If it rejects here, this was the call from the weekend, the move up to this side over here. If this rejects from here and comes back down here, I'm going to be looking for this as a as a head and shoulders play, like this. If we break this level here, so this is the magnet, the area that I said, look, okay, on the weekend, this is what we're looking for. We've now hit that. It's make or break time for gold. The right shoulder over here was obviously a little bit sort of wide, and it's actually come up into it very quickly. So look, we could also do a sell down and then go back up to the top over here. But this is the real area that I'm looking for down here. If we come back down to this level over here, I think you're going to be seeing some head and shoulder, and obviously gold going a little bit lower. Now, I am in the camp of gold going higher, but you need to both consider both sides of this stuff. And this is obviously setting up to head and shoulders, a right shoulder at the moment, but it's not confirmed yet. Confirmation really only comes back down over here, and that's a very bullish break to the top side here. If we see US dollar rip higher, that's obviously going to put a little bit of pressure probably on gold and see this sort of pull back a little bit. But if we do see US dollar sell off, you could see those flows continue to push gold back up to a test and all-time high test breakout. And you got to think of this in the sense of sort of where it's coming from. There's your highs. It bounced off the 23. So, and this is going on just this last run here. That's a very bullish pullback. But as you can see, there are sort of some shakes happening around here. So you've got to be wary of that sort of stuff there. But that was certainly, as I said, look, I didn't go with a massive position, but I did sort of capture this move. I actually sort of got in at 36 for my best entry. So I really sort of caught that bottom side there. But that's a very typical gold move as well. Sort of like sideways, 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 fake out to the bottom, and then rip it back out to the top side there. So yeah, we'll see how this one sort of plays out, but certainly looking very bullish coming off the 23%, but be wary, particularly how much it's sort of grinded straight up through here. Should get back underneath, I'd give it a bit of room to move, but you know, underneath sort of 50, 55 kind of area, 55, that could be starting to see a little bit of a pullback down to these sides over here. All right, so flip along, we got silver held at the bottom of its range. So what have we got here? We got 1 minute or 2 minutes till this data comes out. This is what I was saying. It's basically this box is what we're looking for. Let's get rid of a few of these things. Breakout still same over here. All right. So yeah, look, more or less it is just really in this range here at the moment. It was a nice little recovery for it, and you know, if we see gold sort of move a little bit more, we'll see this push up here. One quick thing with this one, because we've got 1 minute to go. Gold silver ratio is coming into this high time frame sort of resistance area. You can see price struggling a little bit around here. And this is why silver's holding up a little bit better as well. This does look like this last little area through here has a little bit of a negative divergence. As you can see, the price doesn't really look fully committed into that. Okay, that's a 1 minute call. All right, and I'll be back in a moment. All right, cool. So just back now. We see Aussie just copped a little bit of a bop on the nose there. Let's have a quick look at how the data sort of came out. Basically, got a little bit of a cooling and a little bit cooler than expected. So we've, as I said, this is probably the main one that they're looking at here, the quarter on quarter, because Bullock was saying that she wanted to see the sort of quarter on quarter figures twice into that zone. So we saw market sell off as expected, you know what I mean? The little bit cooler. They expected a tick up on the quarter on quarter. That stayed the same. And the trimmed mean quarter on quarter actually came down further than expected year on year came in as expected with a little bit of a push up there. So a little bit of a mixed bag with it all, but I think these two are the main ones that we're sort of looking at there, the quarter on quarter figures, just per what Bullock had said. So if we look at it on a technical basis, obviously, yes, it got smacked down here. It has come into that 30 zone, which we previously had sort of marked out. A little bit of a whack down here. At the moment, it's holding its own. Let's see what happens when DXY sort of comes online. Um, at the moment, look, it needs to get a not sort of super fast, but we want to see with a fairly faster sort of kind of recovery, um, just to sort of show that the market is already priced part of this. This immediate pull sell off here is an expected response with that sort of softer CPI data. But as I said, sort of with the yearly one sort of coming in, slightly ticking up, and also being in line with what they had as an expectation, I think that's why you're not seeing the thing completely melt down over here at the moment. So relying a little bit more on its sort of technicals, we've got the body fill of this area over here. It needs to hold this zone. I think if you break this low that it's just made here now, okay, well then we're just going down a little bit further there. So as it is at the moment, if we look for this kind of thing, we're sitting right, or that comes in right on that 50% retracement as well. This one going up. So yeah, you can see 50% retracement, body fills on the 4 hour, and market's trying to hold it here. I mean, we've sort of what 26 back up to 32, sort of holding a little bit there. So see what happens when DXY sort of comes on board. But I'd say let's put an alert here. Breaking CPI drop lows. Should it sort of come down into that area there? Okay. Let's flip along with the stuff a little bit quicker. Where we talk about silver. Silver, as I said, is really just consolidating through this box over here at the moment. It is looking a little bit more sort of constructive. RSI's there to support it. It sort of did a little bit of a dip down over here, but as I said with the video, sort of like, you want to close outside this box. It was holding this lower sort of support side of this area through here. So I think a break of 30.62 would be quite bullish for it, and we'll probably be looking back up to test that top side over there. So they're the two zones that I'm interested in, sort of what happens here, and then obviously what happens here. Let's get rid of a couple of these things just to clean up the chart. Boom. And obviously, as I said, sort of breakout still remains just above this area here. Looks a little bit more sort of constructive for it. All right, flip across, we've got China. China sort of broke, bounced back up, and really just sort of, again, similar with DXY, in that it's just sort of finding itself a little bit of an area just to really sort of just oscillate back and forward around here. Look, I think sort of, whoop, that's not a, well, it kind of is. There's no buying pressure on that second push through there. Just bear with me 2 seconds. All right, and back there. So, look, not making new highs or anything, so you can't really set aside, but it is something of to note. This is only on a 1 hour. Certainly, this push through here is coming back with sort of no sort of buying pressure whatsoever, kind of thing. So, bounced off, that's fine. Back up here. Look, this is probably an area in which you'd probably want to see it above. Let's make this probably a little bit higher, just update it there. I think that's your top side area there. As I said, it's probably same with sort of DXY. If we see that sort of push out to the top side, you may sort of see this sort of push up to the top side here, but I imagine it'll find sellers at 29, 729, 38, this kind of area through here. Let's get rid of. Yeah. Yeah, so that's your kind of breakout lines through the top there, but kind of a little bit of a flag here. But as I said, this has not really got a great deal of confidence with this little bounce back up over here at the moment. We are seeing a little bit of a bounce on Aussie, actually. Just flip back onto that very quickly. Obviously back into that zone now. So what do we hit? We hit sort of 26 on the lows. 11 points back up at the moment. So where were we prior to it? At 50. So it lost 24 points a bit of a drop, but not as drastic as we have sort of seen in the past. So see, I don't really like these don't match up perfectly. I don't. It's like expanding, so I'm not a big fan of that. But I do believe. Let's actually get rid of this. If I'm going to get rid of one of them, I'll get rid of one of what the sellers are doing there. But I do believe you probably got a little bit of the sort of buyers. So yeah, let's clear this up again. Make it this kind of color here or something. I think that's kind of where you need to sort of, obviously you need to sort of flip this area here, and then push back up to the top side, out over 50, obviously, if you're going to see any move to the top side. But I mean, with that data that just came out there, it's not really sort of supportive of obviously going higher. But at the moment, it's sort of found itself a little temporary base around that 30s level. Um, Keep on ticking on. We got copper, and copper, as I said, it's hit the snooze, and yeah, really same sort of thing. Whole market's just, I think, waiting on FOMC to see what they want to sort of do through there. At the moment, we've got a little bit of a sort of a high and a low to work off. We got the sellers obviously sort of moving it back down. Buyers are holding that sort of flat line there between the 38 and the 50% retracement. I think a push back up here above sort of these previous highs, the bounce highs there, above 322 should see the test obviously then of this falling resistance, and I think that'll be sort of somewhere interesting to sort of see what market decides to do through that period there. But at the moment, it's not looking super constructive. It's really just dribbling along the bottom, so it could very much go dribble, 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 and then plop. As I said, I'm not really doing too much with copper at the moment. I want to see a break of this zone. If we do come down the bottom here, I'd be looking for this kind of move though, and try and capture this leg through here. Major breakouts obviously above that zone over there, but that's a little way off now. All right, cool. So I think that's pretty much it. Actually, it's a bit of a sort of fly through these ones today. CPI, obviously, as I said, just a recap, just a little bit weaker for Aussie. Just having a look through the rest of the data, I don't think we have too much through the rest of the day. Of course, Chinese holiday, that'll be going on all week. No, nothing of note really sort of through today. You got BOE rate decisions tonight. Obviously, well, not obviously, but for some reason this Forex Factory hasn't got any sort of numbers in here, so I'll have a bit of a closer look. Overnight rate, here we go. So the 25 base point cut there. Um, Report status. They're all coming out all at once. This is BOC, sorry, Canadian there. So looking at a little bit of a cut there, and then of course the big one that we're looking for is pretty much as expected, a hold with FOMC. And with the hold, I think everybody will be eyes on the press conference to sort of see if they're going to have a little bit more of a dovish tone to them, which could sort of lead to a little bit of continued weakening of the US dollar. All right, that's it from me.